And everybody, it's Tim Razor, the Chief Investment Strategist here at Revere Asset Management, just at 4:30 here on a Thursday night in earnings Thursday night. But before we begin, stock owners and market lovers, those in the know, and I want to explain this to you. So if you go to Revere Asset, right, and then you click on Daily Market Insight, you know that that is where you'll find all of our videos and where we place, and this is the important part here we're about to tell you, where we place the video podcast before it's ever emailed and sent to everybody. So late Friday afternoon, I take the video podcast that we produce Friday midday, and I put it in here for you. So you'll have two videos. So if you want to get a jump on your weekend research on a Friday night early, super early Saturday morning, you can do so with the video podcast and the normal stock market video. So normally what happens is we email it out 8 a.m. Saturday Central time, 8 a.m. Central, and it gets placed in here, and then it gets uploaded to, we use iTunes and the Google Play Store for Android to distribute the podcast. So it gets placed there, those two places, and it usually all happens Saturday morning. Just the nature of the beast and how it's produced. But for you, those in the know, I put it in here early. So early access to it. You're the only ones that get it. And so if you have any questions on that, or you can't find it, you're like, Tim, what the hell are you talking about? I can't find what you're talking about. Just email me, tim@revereasset.com, right here. You can talk to the portfolio extraordinaire who has the video tomorrow night. And I believe he's joining us for the podcast tomorrow. And then 855-732-5932 in America's Fiduciary. You all have been inundating Danny with questions about just the awfulness of annuities, and something recent that just came up is the annuity company charging I think it was more than, it was closer to 2% for just a bunch of mutual funds you could do yourself, and it's a restricted product, and you're getting, and that's just the annual fee on top of the upfront cost. And so, look, whether you become a client of the firm or not, our goal is to empower individual investors and be your champion. So if you have a loved one that's gotten hosed in some kind of annuity product, or recently told that life insurance is an investment because it's not, just call us, or something. It's like taking that used car you buy to an independent mechanic. Just run it by us. We don't have any salespeople. We're not going to sick you. We're not going to do any dirty, mean tricks like those folks at well, you know, all the places do. We just want to help you. And so, because with that, we know that if we become your trusted source of information for fact and transparency, you will eventually turn one of your friends, said lovers, friends, loved ones is what I was trying to say there, to us when they do need help, and we'll be here for you. And so 855-732-5932 is how you do that. We've had a tremendous 2020, and it's all because of you, stock nerds and market lovers. And so just can't say thank you enough. And speaking of thank you enough, here is my Twitter feed. This is the easiest way that you can get a hold of me. And so at TJ, I just cleared this out before we started the video, but I've already got a new message in here. So if you want to message me, it's the closest thing I'm going to give you to my phone number. I used to give my phone number out, and it just got to be I had too much communication. And so Twitter is where it's at TJ Razor. If you want to direct message me, that means no one else can see your message but me. It's the closest thing you're going to get to texting with me, and I'm more than happy to do it with you, but you got to follow me on Twitter. At TJ Razor is how you do that. And so with that, stock nerds, market lovers, these videos are for what? For your edification purposes only. They're never ever to be misconstrued as advice. If you need advice, if you seek advice, if you want help, just call us. 855-732-5932. We're more than happy to go over any of these strategies we espouse here and help you execute them, even if you don't want our assistance. And if you do want us to do them for you, it's really just a DocuSign, a DOCU form away. It's really not that hard, and it's sure as hell not that expensive, and especially to what some of you are doing out there. The cost of mistakes and opportunity can add up quickly. So with that, where do I want to start? Look, let's just start with some risk here. Put call ratio, this is the same story. So if you've been following my work, you know what I think about this put call ratio. We'll go over that a little bit more probably tomorrow and see if it starts to matter, because I'm like, well, Tim, what do you mean does it matter? Eventually it all matters, right? With the put call ratio, but the VIX down today, you know, and I think this could actually expand. These lower Bollinger Band could expand and get the VIX to walk down. But this is a bullish weekly chart, even though the market was just weird today. Market was sloppy and messy. This is a bullish S&P 500 chart. This is a beautiful flat base that's forming. And look, for me to tell you that it's going to go up and test new highs, I don't know that. But I do know that this is a really bullish formation, and it could easily do this just as easily as it could do this. And I get it. I get it. Think about all the news that you're going to tell me, Tim, how can it be bullish? Unemployment's going to be running out that bonus, that $600 bonus, that weekly bonus. That's going to be running out. But I just want you to think about all the things that you know. The market knows them too. It's what the market doesn't know and gets hit with that really affects the market. And so just think about all the things that you know and the market knows about the economy and where things are headed. And just contemplate for a minute the bullishness of that chart. So, and those of you that follow my work, you know I'm not an ultra, not a, just a stubborn bull or a stubborn bear. I'm just more fact-based than anything. And so let's do this. Let's get into some earnings. That's the same S&P chart on a daily, not a weekly basis, holding the 5. It's just beautiful. Let's look at some earnings that took place here. So let's look at DPZ. And so DPZ reported down 1.5%. That's really no big deal. But what I want to point out to you is with this implied volatility, if you remember, the implied volatility yesterday was over 100%. And so you can see how it bleeds out. It's a big deal. The move was over 30 points going into the earnings print. Now it's down to 10. So that implied volatility really bleeds out. And so you can see that who wins when the move was $30 up or down, and you got $6 of movement here. Open at 404, a high of 422, and a low of 403. You know who wins? The people that sell the options to you, not the people that buy the calls and buy the puts. So if you want to consistently make money during earnings season, when stocks that are about to report, you sell your calls and puts. Sell spreads, sell spreads, sell spreads. Not naked. You sell spreads, sell spreads, sell spreads. Always, always, always buy protection. If you don't know what that means, just call 855-732-5932. We are more than happy to explain what we're talking about here. So that's Domino's. Well, let's look at the big star of the night, Netflix. So Netflix had an implied move of over, it was around $40, $40 or $50. It was $50. So had an implied, had a move that was implying $50. And this went up again. This implied volatility went up again. So last week it started out at 88 or 90%. Yesterday it was about 10% lower, and you can see it ended up about 155% today. That's an extreme. You want to see extreme? Look at some of the biotechs, look at Tesla. But you still have 44 points of movement. Now you can see it's trading down here after hours. And so it went out at 427. We'll just call it 430, just round up. Take it down to 480, gives you a 40-point move there. Yeah, we'll see what happens tomorrow. See if it, you're right at the cusp of that expected move. We'll see if it comes back in a little bit more to settle out. But that's the nature of this beast. And some of the the ultra Netflix bulls are going to tell you all the great things. The bears will tell you all the bad things that took place. And I'm going to tell you that almost always it doesn't matter. What matters are how the options market, the market makers set the volatility in the range, and it's about 70% of the time you're going to trade within that price range. And this may be the same thing, maybe it's not, but I just want you to be aware of that. And then I kind of screwed up my dates with Pets. I did Pets with you yesterday, and so Pets reports on Monday, so I thought I'd have I thought I could hold these over the weekend. Reports on Monday before the open, so I'm going to have to sell this position tomorrow before the close, and I'll do that. And the reason why I do that is because when you're trading options during earnings, these are we'll just call them bins. binary events, okay? So for me to tell you that Pets is going to rip higher for all the reasons that you're going to tell me, or it's going to crash lower for all the reasons that you might tell me, I'm going to tell you that it's a crapshoot. It's a 50-50 roll of the dice, and I don't know that. But what I do know is that, yeah, the day was a pretty not good day in the market for a lot of big cap tech. But yeah, here the Pets worked just fine. And the implied volatility is going up here. Now you can see this is infinite because now they're just done tomorrow, but that's why you don't buy short dated options, although I guess it would have worked out today. And we'll see. I mean, this isn't that huge of a price movement. We'll see if it gets any short covering tomorrow. If tomorrow is a good day for Pets, it's got a lot of short interest. We'll see what happens tomorrow with the PETS, but just watch that implied volatility, how far it climbs. Now they're monthly, so it's a little bit different, but see if this gets up to maybe 90 to 100%. I'm doing the podcast with you, the video podcast. We can look at this midday as well. So that's Pets. And then let's talk about a little bit of a theme that I've got. Oh, you know what? Let's do Shop. Shop is what I bought the other night. And I bought it off to 21, and I want to show you down. Tech is down tonight a little bit after Netflix earnings. But let's look at Shop here. And is this a disaster with Shop? No, not really. I mean, bought it off to 21 here, right? And then same day I bought that NASDAQ short. And then you can see holds the 21, holds the 21. And now you're holding above this low. This low is critical right here. This is a big ranging stock. And what do I want to point out to you? So let's take this to the ATR charts that I've been teaching you with, I've been talking about with you with for most of the year. And let's look at an average. So you're just right below the mean here. So what is the average true range of Shopify during the day? It traverses on average 50 points. So is $33.96, $34 a big deal? Not really. So did it have a down move today? Does it hurt? Yeah, it does. 3% down hurts, but it's not outsized. And so that's kind of what I want to point out to you there. And so as long as it holds this low, I'm going to be okay. Now, if it doesn't hold this low, I've got to sell this thing. And so maybe 2 closes below the 21 tomorrow. We'll see what happens, but I'm going to give it the benefit of the doubt, and we'll see what happens tomorrow with Shop. So then let's talk about a little bit of the theme that's going on here. Have you been following bonds? So the ZB, not as high as it was back in April or March, where it was more fear, right? But look at TLT. So TLT continues to work here. And I've got a TLT position. There's a really bullish chart over here. But what's interesting to me, have you been following the TNX? So this is the 10-year treasury. So if you look at ZN, ZN is the price, right, of the 10-year note. And you can say that's a nice looking daily chart, right, of ZN. But if you want to know the yield, TNX is what you would type in. And look, this is what you call a down trending chart, right? And so the ZN keeps losing yield. To give you some context, if you wanted a 30-year, now ZB is that bond, the average 30-year mortgage is 2.98%. That is a big deal, okay? That is a really big deal. And so there's some trades I have on as I've been tracking the bonds and the yield. And one of them is what? MTH, right? And so here's Meritage. And Meritage had that weird day, a couple days last week, where I bought it here, shoots up like 6%, reverses 6%, comes down to test the zone of the 21. Now you're just right in that zone of up like 6% again. You're trying to clear that old high. You made a new high today. So I really like this Meritage trade. I like the Meritage trade. And so I don't think it's too far extended either. And so by no means is that advice. These videos are always for your edification purposes. But I'm just telling you what I'm seeing. If you go to like a 2-day chart, that's a really nice consolidation off of a 2-day. And so you're clearing this little bit of consolidation here. And I love things that are in blue sky territory or all-time highs. And so like that a lot. And then I've got, based on this bond yield and trade that I've been working on, I've got, let's see here, I've got I'm going to desperately try not to type in Darden Restaurants. So there's DR Horton, and DR Horton just screams higher today. Clears this little base area here on the daily chart yesterday, and now it screams higher again today. And if you look at the same 2-day chart right here, that's still a nice looking chart, and I love it. It's blue sky territory. So I like those two trades. There's probably better out there. Like I didn't buy LGIH because it was extended when I was looking at it. Let's look at LGIH right now. I'm curious. LGIH. Yeah, and so LGIH is doing the exact same thing when the buy LGIH was back here at the 21. So, but I've also got RH as part of this trade, and so I'm liking that. You know, most people go to Home Depot. You know, like when they're looking at those type of, you know, like, oh, housing's working, just start buying Home Depot. I wanted to look a little bit more higher end in restoration hardware, and I think differentiation matters. And so I like this RH trade, and that's on the high end. But I also own this on the lower end, Walmart. And so Walmart hit an all-time high today, and so that's what I was looking for with Walmart. And so Walmart's going to get set to report here, not all to the end of August, and I think this can gain some traction potentially. Walmart can. Let's look at the other retails real quick. Target, it's not a bad looking chart either with Target, but I went with Walmart, new high, whereas Target is not at the new high. It's not that far off either. So kind of like that. And then a lot of people will go shopping here for the stock. And I don't know how. I know this chart goes from the lower left to the upper right, but this is just a bit slow for me, and a little too much chop here. And you had an earnings period here, and I don't know what the cat. This is it's a really tough space to be in terms of Kroger. So RH is how I chose to go to the fight. Walmart flanking RH, and then the two housing stocks, MTH and DHI. And so I like that. And there's something to be said for blue sky territory, as just thinking about pets. That's blue sky territory, and people it's got a heavy short float and old Petsaruski there. So potentially that can get something going too. And so speaking of high end and wanting to stick around there, this has nothing to do with your home, but just a chart I want to show you that I'm looking at here. I like this Lulu. Don's got this already in the protection portfolios, I believe, but I don't have in the stock and ETF. I've just been watching it. And so we'll see. I'm on a 2-day chart. Let's get this to a daily. Yeah, it's a really nice looking chart there. So I like the Lulu, but we'll see how tomorrow, I was looking at those other charts. I just realized with the 2-day. Let's go back to Target. 2GT, doesn't look as good when it's on 2-day. Let's look at Kroger. Doesn't do so much for me. Not like the charts that I just ran through with you. So tomorrow will be an interesting day to see. Netflix is, Netflix is going to open up. So here's 490 at the 21. And so you're currently trading 477, 480. So you're going to open up between the 21 and the 34. And what you want to see is how quickly that gets bought up. And do you gravitate back towards 500, or are you going to head down to the 50-day here, which is at 450? And you don't pretend that you know, because I don't. And so you want to see, are they going to buy this up tomorrow, and how does that affect Amazon, Facebook, Tesla to some extent, and Apple. So with that, with all stock nerds and market lovers, I hope that helps. Video podcast tomorrow. It's going to be a great show. We're going to do stocks. We're going to do some stocks at $10. ZMGA, how's that doing? Yeah, stocks under $10 are tough, man. Stocks under $10. We'll do a little bit of that. We're going to outline the criteria tomorrow, and then we'll get you set up with some more earnings ideas. And it'll be a lot of fun. And then Don, for the nightly video, we'll have the 21 over 21. So with that, I hope this helps, and I'll see you at the next update.